Your job is to make as much money as possible all the time. Be consistent, okay? Where do we get that? In the US stock market. We get consistency in the US stock market. It's got the largest opportunity set and the best consistent volatility out of all the asset classes. And actually in our video series, the IPLT video series online, we prove it in numbers, okay? And we show you the areas that you need to concentrate on to get consistent returns. You need to make money efficiently. Again, how you make money is important. You can't be sloppy. You can't be messy. You have to be tight. You have to make money efficiently, okay? Of course, making as much money as possible takes precedent, but it has to be controlled. How do you get those absolute returns? Your risk-adjusted returns are obviously very important, okay? So when we look at Sharpe ratio and we're using options, taking a 20% risk to make a 60, 80% return. That's a Sharpe ratio of 3 to 4, okay? So you make 3 to 4 times the amount that you're risking. If you trade options, you're leveraging up that 20% volatility, and you're going to land, as long as your trade ideas are good, you're going to land somewhere between 50 to 100% if you do what we do, okay? On smaller account sizes, what do we mean by that? 25 grand, 50 grand, 100 grand, 250, $500,000. Anything under $2 million is a small account. You thought a small account was 5 grand. No, $2 million is a small account, okay? So, if you're taking typically underlying portfolio volatility, if you're forgetting about the options and you just look at that stock portfolio, right? You say, I've got 5 longs, 5 shorts. And through correlation, you're looking at the annualized portfolio volatility of having that portfolio, okay? 20, 25% is about right. You don't want to be taking too little risk, but you don't want to be taking too much, right? And then you overlay that using options. So instead of having long stock positions and short stock positions, you have long calls and long puts, and you stagger your expiries. What do we mean by that? This is preemptive risk management, okay? You can't have too many options expiring in 1 month. It's expiry risk, too much risk, where you've got too many options expiring in 1 month, okay? If there's too many of them out the money, you're going to take a big hit. So we leverage that up because if we've only got a 25% portfolio volatility on our underlying stock portfolio, if we didn't trade options, what's our expected return? We shouldn't expect to make more than 25%. But if we're amazing traders and during the year we sell everything near the high and buy everything near the low, then we can make more than 25%. But we shouldn't expect it. So we can make probably 25 to 35%, but it should not be expected, okay? If we leverage it up with options, 50 to 100%, you should land somewhere between there, okay? If you get a tail risk trade like Credit Suisse on top of that, boom, God-like trader status. If you get a CVNA on top of that, God-like trader status. And there's guys in this room now who have done it this year. Well in excess of 100%, okay? And we didn't necessarily invite these guys. We just said, we're doing our seminar in London. They came. So you can speak to them later. If you got a drinks ticket, they'll be around, okay? Next, to get to this godlike trader status level, you've got to utilize a systematic process. You can't be chaotic. You know, one of the things that retail traders are really guilty of is that they have no process that's repeatable, okay? A high quality process that's repeatable, that gets them results, okay, on a consistent basis. It's very straightforward. If you have a consistent input that's high quality, what are you going to get out? Consistent output that's high quality. That means making a lot of money, okay? So retail traders are chaotic. They're guilty of not having a high quality systematic process, okay? What do we mean by chaotic? What's a chaotic retail trader doing in the last few years? YOLO trading, yes. Where did they go to YOLO trade? Chat forums, Wall Street bets. Who's on the other side? A lot of them, yes. Who does it benefit to have millions of retail traders on Wall Street bets all losing money? Yes. Hedge funds that are the plumbing in the options market for retail and the brokers, okay? So they encourage it. Of course they do, right? That's chaotic retail trading, okay? What else is chaotic? Where do they get their trade ideas from?